Hello everyone, my name is Sana Patel. I am dealing with the performance of mutual funds. First, we see the meaning of mutual fund. Mutual fund is a company that brings together money from many people and invest it in stocks, bond or other assets. Let's see the performance of mutual funds. First one is compare mutual funds performance against a benchmark. You may start by comparing the performance of a fund against a benchmark. When you compare, use a fair and appropriate benchmark. It should always be an apple to apple comparison. Using the wrong yardstick will only give misleading data. Let's take the case of a large capital equity fund. Compare its performance with a broad based index like Nifty 50. And here, benchmark means a standard or point to refer against which things may be compared. And second point is compare fund history. A mutual fund really worth can be understood only during unfavorable market phases, and a fund history can validate that. Look for a fund that has a relatively longer fund history, say 5 to 10 years. Compare fund performance across different time in intervals and business cycles. Suppose a fund has delivered a performance in line with the accepted returns consistently during a market really is a good one. Next, third third performance of mutual fund is compare fund expenses ratio. Expenses ratio is the annual fee charged by the fund or managing your investment. As per SEBI guidelines, the fund house cannot charge more than 2.5% of the fund's average assets under management AUM. You need to check the expenses ratio mutual funds final before finalizing on a given fund. And fourth performance of mutual fund is compare risk adjusted returns. Instead of looking at just annualized returns, look for risk adjusted returns of the fund as per risk return trade off. A higher degree risk should be compensated by a higher level of return. The risk is measured with the help of standard deviation. Consider two equity funds A and B have a standard deviation that is 12% and 15% respectively. If the Sharpe ratio of A and B is 0.48 and 0.60, then go for fund B because it's a better bet for the risk taken. However, if B's Sharpe ratio was around 0.50, then you could even have gone for A. It is because more 0.02 extra return it's isn't worth it for assuming an extra 3% risk. Fifth one is compare average maturity and duration. These are essential used to evaluate debt funds. Average maturity related to the periods after which the securities held a debt fund will mature. The longer maturity, the higher is its sensitivity to interest rate movements and higher rate changes of a fall in the fund NAV due to rise in interest rate. NAV means net assets value. And sixth performance of mutual fund is compare funds alpha and beta. Alpha measures the number of extra return generated by the fund in excess of the benchmark return. Beta measures the riskiness of a fund. Moreover, it shows whether the fund losses or gain more or less than the benchmark. Next, 7 point is compare portfolio turnover ratio PTR. The portfolio turnover ratio tells you how often the fund manager buys or sells security in the portfolio. In case of equity funds, it shows the level of trending taking place in the fund. You need to know that whenever an equity share is bought or sold, it attracts the transaction charges like the brokerage means a company that buys or sell goods or assets for clients. Mm, Thus, PTR is an important uh, criteria for fund selection. While choosing a fund, look for one with a lower PTR. If you want to go for a fund with a higher PTR, then check whether such higher PTR is being justified by way of higher returns. And last, performance of the mutual fund is how clear tax can be help you. Unless you are an active investor who closely follows the market trends and related metrics, it can be not very easy for you choose a mutual fund according to the above parameters. Um, Clear tax can help you here by handpicking the most suitable and best performance performing investment portfolios uh, for you based for you based on your financial goals. Uh, Thank you.